morning, everybody. This is the website that I use to determine my asset allocation for my portfolio. Super easy to use. Love this website. It's called portfoliovisualizer.com. So what you do is you go to the website. It's completely free. And then if you go down here to the lower left side, you can see backtest asset allocation. Click on that. And then you can see here time period that you want. So the earlier the better. You want to see a portfolio that has stood the test of time for a long period of time. So initial amount 10,000. You can make that whatever you like. So here are where you can put your different asset classes. So let's say we want some of the stock market. We want some long-term treasury bonds. Say gold, some REITs, include commodities, and you can also put on some more intermediate term bonds. Okay, so for portfolio one, you could basically make these any percentage that you like. So let's say for stocks, we want to put 50% of our portfolio. Long-term treasuries, let's say 30%. Gold, we can put 10. And then we can do 5 for real estate, 5 for commodities, and then this one we won't have any intermediate bonds. So if we click here, Analyze Portfolio, you could see here with the initial balance of 10,000, its final balance was 23,000, and then you have to look over here to see when it started. So January 2007. Some of these assets that we put down here, they don't have information prior to that year. So you may only get from 2007 to 2019. But that's okay because we had a stock market crash and a real estate crash in 2008, which this will capture, which is good. The idea here is you can hopefully find something with a really good overall return with minimal downside. So you can see here the worst year is minus 15%, which is not that great. So we want to find something better than that. So what you can do is you can compare it. You can go here and let's say we want to change it to 30 of stocks, 40 of long-term bonds, let's say 10 of gold, 5, and then we could do 2.5 and 2.5. It didn't add up. Okay, make it 20 of gold. So you can see portfolio one was the initial one that we did, okay? And you can see its worst year was minus 14%, and you can see portfolio two, we started the same amount, had a slightly higher balance, but its downside is only negative 3%, 3.76% the whole time. So that's pretty good. And then you can see here, so this is inflation adjusted 5%, but the CAGR is basically saying how much on average it's increasing each year. So these are pretty similar. So let's try another one. Let's keep it at 30. We can do 30 here. Okay, so if you look at these different portfolios, that third one actually has the lowest return and still quite a bit of downside. So I don't think I would want that portfolio. But the whole point is that you can just change these different asset allocations for what you would like, and you can backtest it over a period of several years. So this is a website I love. I use it. The amount that I like in each is I do 30 in the stocks, 40 long-term treasury, 10 in gold, 15, and 15 in REITs. So for portfolio 1, which is what I just changed, you could see it has the highest final balance, and its downside is still a little more than portfolio 2, but minus 6% isn't horrible. So that's why I like this one. So you can do whatever you like, but hopefully you enjoyed that.